Griggs Orr, Benny Reese West. What a week in uranium. Like a pretty quiet week, and then obviously today we had a fair bit of action. So let's just jump in and dissect some of this stuff and see what we can see. So the one thing I'm looking at here as we round out Friday, this seemed to really garner a fair bit here. Reuters reported that Canada is expediting approval processes for new nuclear projects. So a little bit of good stuff there. Cameco, maybe a little bit disappointing. It didn't rally too much, but I'm gonna circle back to next gen energy and also Denison, because obviously Denison had also reported today. Next gen, I believe, is reporting today, but I haven't seen their reporting results as yet as I'm recording this. So that remains to be observed, of course. But certainly these two stocks, they've wouldn't say they've changed my thinking, but they're showing some slightly different behaviours from the rest of the market. So we will circle back to look at these. The first thing, though, I would like to do, just looking at this, I'll just talk about the Denison earnings for a moment. So I think, I like to take the middle ground on good news or bad news. I don't get too overly excited about good news, and I don't get too overly down about bad news. I just try to sort of take the logical or the unemotional read of it. So obviously, when you see a 450% increase in in EPS, right? So yeah, I mean that sounds great, and it gets everyone excited. So the company attributed the jump to a significantly larger gain on its physical uranium holdings. Now that makes complete sense, right? Like, as we just quickly buzz over here, just because I don't really have access to that Bloomberg spot uranium chart, these UXC futures is probably the best we've got to go off. It gives us the best lead. But the point being is, this is the quarter that just got reported. So obviously you can see that the market was up, $18.50 or 25% in that quarter, and then obviously the quarter before it was up 30% or $17. So yeah, I mean, it goes without saying, right? The second half of 2023, the price has moved from basically here at $55, doubled. So anyone who's holding that stuff, obviously, the value of their the value of their holdings has gone up. That goes without saying. I mean, you got to take that with a grain of salt, though, of course, because now you look and you think about the first quarter of this year. We started the year here at about $91, and even though we got all the way up to the high here, we're at $106. We're back to 94. So obviously this quarter, and this is roughly where the quarter will finish. So obviously, you got to think about, okay, well, the reportings for the next quarter, maybe they're not going to be quite as stellar, because we don't know what the price is going to do between now and then. But obviously, it's not going to. It doesn't look like at this stage, with only sort of 1 month to go, it doesn't look like we're going to get a continuation of this sort of stuff. It looks like that this run. And that's been the way I've just maintained my view, is that this particular run is over, which doesn't mean the entire run is over. It just means that I believe, anyway, at this stage, that the market's pausing to take its breath. So what I would say is, like any sort of earnings that come out, and maybe Next Gen's in the same boat. I haven't really been through their earnings. I just look at them. I don't sort of dissect them too hard, because I'm just trying to read charts rather than do fundamental analysis on companies. I'll let you do that in your own time. But it's just more, keep that in mind. Obviously, there's going to be some fairly hefty movements in the balance sheets of the assets that they're holding, because what they're holding has gone up hugely in value. So keep that in mind. Denison has had a strong day, so maybe that's just the two things put together. But now I'm just going to sort of jump through a bit, and we'll just take a bit of an overview of the market, and I'll just dissect, because I think one of the themes that I'm sort of looking at today is that we've thought about the market sort of coming off its trend, and now starting to move into a bit of a base building and accumulation phase. So we'll just have a look see what we can see if that's getting going yet or not. So I'll circle back to some individual names, but let's just run through these quick. I mean, URA. I've said this is still my feeling about the whole market, right? The 2023 trend is finished, and we've broken below the trend line, and this now looks like it's starting to go into an accumulation phase. So that's URA. Energy Fuels is still the dog, so we are going to circle back to Energy Fuels and take a look at that. But that hasn't its 2023 trend got smashed apart a long time ago. Cameco, the same thing. The trend broke, and now it looks like we're just starting to try to find our feet here, as we sort of talked about last week. I'm not going to look at Cameco today in detail, but what I'm going to show is pretty applicable across most of the names. But the point here is that the trend that I see is it's a broken trend as far as I'm concerned, as from what I can see. The trend's broken. UEC, even though it had a really good fight back today, the trend line got broken, and it's still trending down. Well, I would say trending down, but it's fallen far enough below its trend line and come back far enough for me to be still convinced that the trend is over. And as a result, URNM, it is made up of all this stuff. Of course, its trend's broken. Physical trust the trend's broken. And now we start to get to points where it gets a little bit more interesting, because when you look at the juniors, I mean, obviously, NextGen makes up a pretty good chunk of the junior miners ETF, and that had a pretty good fight back today. So I think we talked about this previously, that maybe the juniors are going to be more the value areas at the moment rather than the bigger names, but this isn't like a definitive trend break like the others, is it? So I'd still, at this point, yes, I would consider this a broken trend. But for me, personally, and the way I'm looking at it, the problem for me is going to be if this starts doing this. And I'm like, well, then I'll be like, is this just a little deviation below the trend? Because it's not very conclusive. So, I mean, that remains to be seen. But that would upset my apple cart in an analysis sense, because then I would have to start to think, well, maybe the trend on this one didn't break. But that remains to be seen. But this segues us into the last two I'm going to look at, where the question mark is even sharper. So when we look at Denison, and if you had this good explosion today, you start to look at this and go, well, that's not a broken trend. And you're right, it doesn't look like a broken trend to me. It just looks like a little deviation below it, even though everything else in the space looks pretty conclusive that the trend's broken. So, do you redraw this a little bit? I mean, you've got to be careful about redrawing things just to suit, because all of a sudden you can go, oh, well, that's not the real trend, this is the real trend. But then if that breaks, you might go, oh, well, that's not the real trend, this is the real trend. So, that makes it somewhat difficult. But to me, it kind of looks like, so you can connect this up, and then you just look at this little, this little deviation we got below here, and then it rejected. And is it doing the same thing here again, just on a bigger scale? I mean, it's a curly one. I don't know if I've got a definitive answer to that. And then we come to NextGen, and it's even more sort of inconclusive that this is a broken trend, because of the power of how this is pushed away. So, the Denison and NextGen are causing some headaches for me. Probably not so much headaches for people who are holding long. It's happy days, but from my point of view, I'm like, okay, well, you guys certainly aren't playing to the same tune as the rest of the market. And that's fine. They're just doing different things. So what I'll do is I will circle back to have a quick look at Denison and NextGen towards the end. But I would just look at URA and energy fuels. And we just want to have a look at, because I think, like I said, the theme this week, I just want to have a look at some accumulation patterns beginning to occur, so we can sort of observe what's happening at the moment and sort of have a look at what we're looking for. So let's start off here with URA. So I've just come right down here onto the hourly, because I'm just sort of starting to look for, the only thing I'm looking for at the moment is early signs. So we know we had this big run down, but the first thing we've got here on the hourly chart is we've got a pivot high here. This hasn't printed as a pivot, but it will. And then we've got a break of this high. So we've got the slight change of character here just on the hourly. Okay, we've got the swing pattern just beginning to give us a bit of a hint that it's trying to form a bit of a base here. Okay, so now that it looks like, because we've got this, this is just looks like the start of potentially our very first gentle uptrend coming in here, and we can see we're just respecting this at the moment. That's quite interesting, the way that just tucked right into that, right? Just, I haven't got that lined up exactly, but you get the point, right? It's kind of holding that trend line there. So, whether or not that turns down, I don't know. But you just start to put together, and we had you can see a little three-wave swing here, a little three-wave swing back down. That's not in an Elliott sense, that's just in a swing sense, and looking at the pivots, the short-term pivots. But, then we've had this move back up. So we are just starting to get some pivots that are starting to trend higher. So, just on this little hourly basis, you would start to go, okay. And look, you can put other modes of analysis on top of that. Like if you look at how Red Devil does it, he'll use EMA riders to just sort of show him where the market bumps into and out of, and what the market offers the market support and resistance. So you can sort of see this trend, and then you could put the EMA rider on and say, okay, well, we're starting to trend up. If we're starting to run into that EMA rider, do we get above it? Do we start holding it? You can mix a lot of stuff together. You could say, oh, okay, well, maybe we've got 1, 2, 3, 4, 5 waves down here. That's sort of, I'll have a look at the bigger picture quickly. But the point being, this is just like the embryonic phase of, because we're on the hourly, remember, the embryonic phase of what we're looking to set up. And remember, we're kind of looking for, this is the classic schematic, but, it almost certainly won't play out like that. But this is the sort of thing we're looking at. And is the market now going to start to, after it comes off here, is it going to start to find its range, start to show some classic signs, including the spring, before it pushes on again? So right now, just looking at this and not trying to be predictive or anything about it, is I just start setting it up. I just say, okay, well, preliminary support, the selling climax, and the automatic reaction off the bottom, then another test, and then we push back up again. So, I just pencil this in, and what would I want to see happen? So, like, if it was going to play perfectly to the schematic, which I can almost certainly guarantee it will not, this would be the kind of thing that we'd be looking for, that we're setting a bit of an upper range an upper boundary to the range here, and then we'll also have like a bit of a lower boundary to the range. So we'll just bounce with this, but at some point there'll be a quick test below just to shake them out, the test, and then we start to build onto the rally like that. So we get, we start breaking above this area of resistance in a show of strength. And then we've got the backup, or the last point of supply, where and this is just classic, right, where old resistance becomes support before we move back on. And so that's just a little sort of thing you'd look for on the hourly chart, just to see these little price actions start to develop like this. And then what would that mean for the bigger picture? Well, this is kind of still what I'm sort of thinking is going on here. I don't know, but I'm kind of just expecting that we're going to go into this more prolonged trading range. Now, I'm not making any sort of suggestion about the time frame. I'm just thinking that we're going to start to bounce around like this, and we're going to start to see this sort of price action develop. So what would happen is we get that little accumulation on the hourly, and that pushes us up to get our automatic reaction top on the daily. Okay, and now what would that mean? And then you can tie this back into Elliott. Like if you were coming at this from an Elliott perspective, you would probably think, okay, so we get the A wave down, and then we get an A, some sort of B, and then some sort of C to get the B wave, and then an impulse down in a spring motion, and then a sharp reaction off that, and that would be like, okay, well, this is wave 1 and wave 2, and that's how it would go together in an Elliott sense. And then even thinking about that more broadly, then I might be inclined to come up and go, okay, A, B, C for an A, this horrible looking B wave, and now we've got an A wave. We're going to get a flat B wave, and we're going to go up to get the C wave. Okay, and that's how you'd put it together. But what I'm saying is, I would expect, what you'd be doing then, you'd be going, okay, well, now we've got a new larger trend like this, and we'd be looking for the market to move within this trend. But I don't know any of this is going to happen, but this is just how I would plot it all together if it started to turn out to be a large accumulation event like this. But you know what? You can say, yeah, you're wrong. It's going to go like that, and it very well could. I wouldn't, because at the end of the day, all the fundamental issues around the space that's driven it, thus far, are still there. Okay, nothing's been solved, so that's why I still think there's, and you can even see here where we're just starting to put a floor in here. There's going to be a point somewhere in this shelf, and maybe that's it. Maybe we just found it, $26.80. So it might just become a case over the next however long that anytime the market gets below $27, you want to buy it, but just expect that at some stage they're probably going to try to shank it on you and try to shank you out down to 25 or something like that before it goes on in a springs fashion. So, that's the kind of thing that I'm just looking for. I don't know if it's going to happen, but it's just what I'm kind of anticipating that it will happen. So I'll just watch for signs. I mean, I've got to watch for signs that that's completely wrong as well. But as it sits, that's just what I'm looking for at this stage. So just coming in to have a look at the same thing here with energy fuels. Now, there's nothing decisive going on here. Like the only thing we can really see that we've got going on at the moment is we've got on the hourly, we've just got this, we don't even really have a change of character yet because we've got this pullback. We're yet to take this out. But, if that started, this would be the sort of thing I'd be looking for, okay? Just this sort of accumulation going on. And like I said, it almost certainly won't, if it does turn into an accumulation sort of event, it almost certainly won't pan out exactly anywhere like this, but it won't pan out like this schematic. This is just the general idea of what we're looking for, okay? We're just looking for a market that sets a nice range in some way, shape or form, and one of the good signs that we're looking for is a very quick test below and a very quick rejection away, okay? At that point, that's where you start getting interested because the idea is that the spring, that the test below the support of the range will occur late in the piece. So once you see that, then you start to go, okay, I'm buying the pullbacks now. I'm going to try to ride it like that, okay? And that you've got a natural stop point down there. But that's the kind of thing that we're looking for. So obviously we yet to see it. It's very early in the piece, but I'm just thinking. I mean, we've got a bit of a double bottom here, so we yet to kind of come back and test that. And, for all I know, next week, energy fuels could just do this. And then all of a sudden, this is all, well, it's not in the bin, but it's like, well, this is not what's happening. It's still trending down. So, like I said last week, I'm looking for this to find its feet, but it's just a difficult stock. Everybody who's ever had anything to do with it, it is very difficult. But like I said, I'm certainly not charging in to buy it. I'm just put it on the radar and just see if this sort of thing starts to eventuate, because what we really want to do is watch this sort of thing happen, and we want to be starting to get involved around these sort of points where we've already observed all this happening. And if it gets back up here, or even like I said, if you get that spring and it starts to trend higher again, then you might start getting interested. But ideally you'd be looking for this sort of area to think, okay, well, I'm going to buy this, and then I'm going to put my stop here or somewhere below this, and then I'm going to try to ride the next wave up. So remains to be seen. Of course, energy fuels, once again, very difficult stock, not very popular, but that is what I'll be on the lookout for moving forward. So now we move on to NXE, and the curious case of NXE, where this is the big overall trend line that you can sort of make the argument, say, well, is that really a broken trend? And, yeah, it's fair enough, because what have we got here? We've got a distinct change of character with a very, very strong rip, okay? And also, when you look at this, great divergence, okay? Like, this is just on an hourly, of course, but you can even see, we had the divergence here coming into the bottom, but, there's even some hidden bullish divergence here because the market's made a lower high, even though the RSI made a lower low. I won't get into that, but even looking at this in an Elliott perspective, you'd be thinking, yeah, this certainly looks like a 1, a 2, and this is coming in for a 3, and so something's terminated down here. Okay, so I think this is kind of interesting, because looking at it and thinking about it in that Wyckoff sort of scenario, it kind of looks like the things we're looking at URA and energy fuels on the hourly, it looks like it's already completed here. And that's why I'm saying, just because there is this schematic, it doesn't have to necessarily conform exactly to this. It's just the general idea. So when we look at this, we had the climax of the selling. We had the automatic reaction back up here. Actually, the automatic reaction would be there. That set a bit of a range. Now, we got a bit of a secondary test down here, but we just got this little spring, this little push below, okay, because we made this sort of low here, and that kind of set like the little bit of the range there. So we had the bottom of the selling, the selling climax, the automatic reaction. We got this little test down here. We came back. There we had the spring, okay? And then what have we got? We've got this big change of character trend here, right? Show of strength, but a long way above. So, it doesn't, like I said, it doesn't have to conform. Then we got this pullback, and that's quite a deep pullback. Okay, it went just around about that 61.8, which is kind of where you want to see it, and then bam, we got a big explosion off this backup or last point of support. So, this is kind of how this sort of idea of accumulation has played out, but it's further down the track than some of the other ones. But I think this is just a great demonstration of how, you can't sit here and go, oh, but it hasn't made this and it hasn't done this like it does in the picture. It's not really about that. It's just about observing what's happening within a trading range. And when you see that little push below, and see, this is just a great example because it's such a quick rejection, a big candle away from being below where it had held. Okay, this just an hourly, right? It's just a small thing. Okay, so all of a sudden you're like, okay. And so what are you thinking here? Well, in an Elliott sense, you're thinking, well, this is probably a one wave, some sort of two wave, and we're going up for a three. This is a big impulsive move. And so once again, I'll highlight there's big question marks as to whether or not this is actually a broken trend, but I'm just going to assume, for the sake of argument at the moment, that NXE is not going to continue to just explode higher. It's going to go into a more lengthy trading range as well. So what you think about the schematic that we were just looking at. We've had the accumulation down here at the selling climax. This is on the big picture now, or on the daily, and we're now moving up to an automatic reaction. And so what would we be thinking? We'd be thinking, well, we're going to sort of start, we'll come back and we'll test this low, and then we'll come up here and maybe poke through this high, but just start making a bit of a range high. We'll come down and get a spring where it just shakes everybody out. Maybe just breaks through these bottoms here or something. Maybe that spring just just does enough. You know what I mean? Just does enough to make you think, oh, it's over. That's the idea of a spring. And then the very quick move back out, the show of strength where we start to hold above here, last pullback, we test old resistance as new support, and we move on. And then again, in an Elliott sense, you probably think, okay, A wave, a B wave, down for a C wave. I mean, and when I say A, B, C, it could be W, X, Y. What I mean is just a corrective. You could label this up as a corrective wave. It's sort of all, you can tie it together, and all of a sudden you've got the 1, 2, maybe the 2's deeper, as you saw on that hourly, and then we're up here, and what's happening now is that we're on to the next trend. We've got the next trend going on, okay, and that starts trending higher. And then when we go back and look at the bigger picture, we're like, okay, yeah, so now in an Elliott sense, what we're thinking is we've got the trend, the correction, and the next trend. And that's sort of how you'd put it all together. And then what do you got? You just got a swing pattern, a trending market that's going higher. Okay, it doesn't have to be any more difficult than that, but that's just sort of what I'm trying to nut out here, is just, are we going to get this sort of thing before we go on? I mean, that's, like I said, that's my feeling. My feeling is that is what's going to happen, but I don't know that, of course. I'm not predicting that's what's going to happen. I'm just anticipating it. Okay, so you might say, what's the difference between anticipation and prediction? Well, good question. I'm not betting the farm that this is what's going to happen. I'm looking for signs that this is what's going to happen, and until it shows me something different. And these ones are definitely asking the question very quickly. It's like, well, are you sure about that? Because look at this rally, and that's not a broken trend. Well, yeah, I've got to say, well, I don't know. I'm going to have a look. I've got to stay flexible in my thinking. So even just quickly brushing over Denison here again, and this is the same sort of thing, because I wouldn't have said that the schematic here is as good, because we don't really have a clear spring, and you don't necessarily need one. I haven't done the drawings and the work for that, but we've got a nice double bottom here on the hourly, and we've got a nice change of character, and that's just the first sign that there's some interest down here in holding the market, and now we've propelled higher. So what are we looking for from here? Well, simple, right? We're just looking for the trend to keep going. So all we've really got is the embryonic stage of a trend. But it's a bit difficult to see because we're coming off a double bottom. There's no, we've got that. That's what we've got. What we would prefer, of course, is that, because then we can channel it. We can't really channel this at the moment. I mean, you could probably take that, and then actually what you could probably do, you could probably take that and then project it off that. That's probably what I'd do, and then just see if any subsequent pullback holds that line. If it does, then you know you're onto something. That would be what I'd do. But I'm not seeing any. I mean, obviously we've had a pretty good rip, but remember, one day and one earnings report doesn't make one swallow doesn't make a summer. So one earnings report doesn't necessarily change the whole tone of the market. Fibs are rubbish. But you've got the start. You've got the start. So, like I said, I'd prefer, maybe, yeah. I'll keep an eye on this, and if the schematic starts to pan out, and there's a different way to look at it, then we'll go from there. But right now, all you can say is we've got a strong change of character. Is that enough? It's enough to get you interested, sure, but is it enough to stick a flag in the ground and say that is it, that's the low, and the rally is now imminent? Don't know. It's still not my feeling, but we'll see. Okay, look, I'll leave it there for this week. So look, thanks for watching, and let's see how these accumulations play out over the next couple of weeks. See if anything, or maybe I've just got to change my ideas and thinking around it altogether. And if I do, I do, and I will let you know. So. Look, have a great weekend. Have a great week next week. We'll see you next time. Bye for now.